Yes, people. So now we're starting with the next topic, that is profit or loss pre and post incorporation. This topic also has two sections. One section is profit or loss in the pre-incorporation period. Another section is profit or loss in the post-incorporation period. That's all. Simply you have to find two components in this topic. That's all. In the pre-incorporation period, how much profit the company made. In the post-incorporation period, how much profit the company made. Finding profit and all should I have to tell you, or you are already experts? Already experts. So many P&L you have done. Correct, no? With so many zeros, so many, so many things. Yeah, you are experts. You know all that stuff. Yes. Okay. But one thing that is actually striking me is this word pre. What is a full? It is pre-incorporation period. Incorporation means what, sir? Incorporation means registering the company. Yes, no, with ROC, Registrar of Companies. If you want to start a company in India, you need to file some papers and the company needs to get itself registered with ROC. So the company, the ROC will give a certificate saying this particular company is registered under the Companies Act of 2013 or Old Companies Act of 1956 or whatever. Is that okay? Yes, all right. Now you tell me, when will the company start its operation? When will they start their operations? Before incorporation or after incorporation? Whenever they want. ROC and all that. That is just formal. Yeah. Companies are supposed to start their operation after getting the registration certificate. So they're supposed to start their business after incorporation. Correct? No, logically also correct. No, first, unless you register, the company itself will not come into existence. Can you be in a position to transact? Yes. But this particular topic is saying pre-incorporation period ka profit or pre-incorporation period ka loss. But we know that, see, profit or loss will only come when you start doing some activities. But you can start the activities only after incorporation. I mean, this topic is wrong. We'll write an email to the ICI and saying, about topic, take it off. Wrong topic. When will pre-incorporation period ka profit or loss come then? Don't know, sir. Don't ask too many questions, sir. We have paid the fees, sir. We have a right to ask the doubts, sir. You cannot ask. Perfect. Correct. I'll give you a more conventional example. That is also absolutely right. Waiting. Correct. What's your name, Dan? Vinay. Okay, let's take Vinay ka example. Okay. So Vinay is our student. And we are, what is our company name, sir? ArivuPro. Correct. No? So one day he got excited or maybe overexcited. Don't. Okay. He came to us directly and tell, how much? I said, what? Like, how much? Like, what? How much for your company? Tell. I am bugged of sitting there as a student. Now I want to sit on the management seat. I want to run this company. You tell me how much money. Yes, sir. So Vinay is a man of few words. He just told how much. That's it. He's not giving up only. Continuously pestering us. Hey, tell how much. And we told, okay, to hell with him. Okay, 50 lakh rupees we do. Meaning we told, if you pay 50 lakh rupees, the company is yours. Vinay told, that's all. Hey, that we didn't expect. He gave off a check. Okay. All right. Now, he doesn't want to continue with ArivuPro. His academy. What is your name? What do you want to change it as? Vinayak Academy? No. Okay. From ArivuPro, he wants to change the name to what? Your academy now. You can change. You can put whatever name you want. What is the favorite name of yours? What do you want to put? Anything limited. Okay. Yeah. From ArivuPro, he wants to change it to anything limited. Okay. All right. You are okay, no? The example, no? Just for the fun sake, okay? Now, don't take it to the heart, Later, don't throw pelt stones and all, okay? If you feel I should not use your name for example, 10 before. No, I'm okay. All right. Let's say he bought our academy and he wants to run the same business under a new name, that is Anything Limited. Let's say he bought our business on 1st April 2023. That day, he bought the business. He gave the check and he told, yes, okay, take the check, and from this day onwards, the business is mine. Okay, but does he wants to continue under same name or he wants to change it? Change. He wants to change it to Anything Limited now. That means he has to approach whom now? To register this new company, he has to approach some authority. In India, that authority is Registrar of Companies, which is ROC. Okay, ROC is a government agency. Do you think they will do on the same date? They may promise, but do you think that will happen? He submitted all the document. Finally, the company got registered on 1st July 2023. Okay, so that means this particular company came into existence when, sir? 1st July. But from which day did he buy our business? 1st April. That means from 1st April onwards, okay, whatever profit or whatever loss we earn, does it belong to us now or does it belong to Vinayak? Vinay or Vinayak? Vinay. Okay, does it belong to us or Vinay now? Vinay, because he has already purchased our business on 1st April. This is okay. That means all the profit or loss belongs to him. But his company is coming to existence only on 1st July. Correct? No? And moreover, now class is already running. Just because he bought the business, will he say, get out to me? He may say, I don't know. Okay, but will he shut down all the operations or he will let the operations to run? Because if he shuts the operation, it is a loss for him only, no? So he may let the operations to go on. Meaning teachers will come take their classes. Students will enroll for the classes. That means, can I say for this period means 1st April to 30th June, can I take it? For this 3 months, is the operations running? Yes. That means for this 3 months, will company make some profit or loss? Yes. But that profit belongs to which company now? Anything Limited. But that Anything Limited, has it already got registered? So that means this 3 months ka profit or loss, we call it as what? Profit prior to incorporation. So generally this scenario will come into play when one business buys another business. Or somebody pointed out there, when partnership firm gets converted into a company. In these sort of scenarios, this particular concept will get triggered. Is that scenario okay for you? When it will come? I'm not talking this and all, they won't ask. This is only for your understanding logic. That's it. Meaning is okay for you, everyone? So when will the scenario come again, sir? When one business purchases the running business of another company. When one company acquires another company and there is a delay in registration. So this particular scenario of pre-incorporation profit or loss comes into picture. Sir, AS14 will get triggered. Huh? Somebody has learned advanced accounting very nicely. Yeah. Amalgamation will come. Okay. That's for a different treatment. Okay. This is a different treatment. So let's not worry about that. More or less it will fall in, but let's not worry about that for the time being. When we come to advanced accounting, we'll take care of that. Any other doubts you have, or we can move forward? Move forward. Josh is still high only? Or after the break, it has come down now? It's always high. That's awesome. Or at least we'll say it is high. High charge. Okay. Very, very simple topic. All you have to do is only find out 2 things I said. What is those 2 things? Find pre-incorporation profit. Generally, it will be profit in these sort of problems. Hence, I'm using the term profit. It also could be loss. But 99% the problems will revolve around profits. Okay, that's the reason I may often use the term profit. Okay. So again, in this particular topic, you just need to find out how much is pre-incorporation period, profit, and how much is post-incorporation period, profit. That's okay. How do you find profit? How do you find out profit? Expense minus income. Correct? Or ulta? Income minus expense. But we are fancy students, right? We just don't do income minus expense. First we do trading account. Then we do P&L. Yes. So basically, normally in these sort of problems, no, they will give you gross profit. Have you heard about this term? Somewhere in Bachpan, you must have done this. Gross profit. I used to prepare trading account, and trading account ka balancing figure used to be gross profit. Correct? No. From gross profit, you can arrive at Net profit. Yes, that is all we need to find. In this particular problems, no, they will give you generally gross profit. From gross profit, you have to arrive at net profit. But net profit for two periods, for pre-period and post. Easy, no? Just you have to consider what? Some extra incomes and some extra expense. Do some plus minus and it is over. So easy topic. For plus minus and all, they've kept it in syllabus. But you know what I say I will do? Here, just check. They'll give bouncer thing. Okay. In this example, how much is pre-incorporation period? 3 months. How 3 months? Business was purchased by Vinay on 1st April. But Vinay ka new company got registered only on 1st July. That means April, May, June. For 3 months, was the registration already done or yet to be done? Yet to be done. That only we call it as pre-incorporation period. Pre means before incorporation period, which is how much, sir? 3 months. A year generally will have how many months, sir? 12 months. In 12 months, if 3 months is pre means 9 months will be correct. You just have to find out 3 months ka profit and 9 months ka profit. But in the question, they will not give you data for 3 months and 9 months separately. They will give you data for 12 months. They will give you whole year ka data. You need to split that data into how in this 12 months, how much belongs to 3 months. In this 12 months, how much belongs to 9. Like that, you have to do the simple apportionment. That is the only crux of this particular topic. Okay, they will give you annual data, but you need pre and post data. That's it. That's all is the overall overview of this particular topic. Mugita hogada? Generally, newly commenced. If they buy another business, otherwise, no. Otherwise.
It was bought in February and it is incorporated in May.
Different year, huh? That's okay. I mean, in this, these are all not accounting, sir. These are not accounting. They will only ask you to find out pre and post ka profit. It's a statement. You don't have to worry about journal entry balance sheet. Okay, so you just even if they ask like that, generally they don't, because it brings in a little confusion, because they have to give 2 years ka data then. I told they will give how many months ka data? 12 months. 12 months of the same year. Now, if they separate the year, it's a problem for institute only, because they have to now give first year ka data, second year ka data. That becomes very easy for students. You know why? First year ka data is given. No, that is for 12 months. If pre-incorporation period is 3 months, every student will do into 3 by 12, 3 by 12, 3 by 12. Problem over. There they will do 1 by 12, 1 by 12, 1 by 12. Problem over. They will not. It becomes very easy and little weird, so they will not get that. Valid question, but kind of not applicable in as far as the examination is concerned. Okay, now? If we take our father's business, it is applicable. Huh? Yeah. If your father's business is a separate legal entity, and if your is a separate legal entity, it will be applicable very much. So it doesn't matter whom you acquire it from. Sir, doubt, sir, pre or post comes only on purchase. Correct. Yes, somebody was saying there. I'll tell you, sir. He's saying, so why are we doing all this drama? First you tell that no. I know how to do it. I got it. That I will do it. Okay. You tell why are we doing. That is why I'm paying fees for. Okay, let us take his question. What first you tell, sir, what are we supposed to find out? Pre-incorporation period ka profit or loss. Let's take it as pre-incorporation period ka profit. Only for the discussion sake. And then we also need to find out post-incorporation period ka profit or loss. Now, this particular scenario which I explained, Vinay taking over our business and delay in registration and all that, how often do you think it will happen? Recurring activity or once in a blue moon activity? Recurring or non-recurring? So, this profit is a revenue profit or capital profit. The nature of this profit is not revenue profit, but rather this is a capital profit. And all capital profit should be transferred to capital reserve. So this period ka profit has to be transferred to capital reserve. Okay. Whereas this post incorporation period ka profit, after incorporation, anyway, some company will make profit or they will make loss. Is that recurring profit or non-recurring? That's a recurring profit. That means that is your regular revenue profit. Where will that go to?
Profit and loss.
P&L account. So this, in our example, this 3 months ka profit will be transferred to capital reserve, whereas 9 months ka profit will appear in P&L. That is the reason. Got the intention? Now he's saying happy. Okay. Others? Need a minute for processing or already processed? Processed. Now, since the incorporation is not yet done, okay, so hence we say this particular event is extraordinary. Hence we treat that as a capital profit. From the business perspective, it's a regular activity. But how often this whole transaction only will happen? Only once, right? Hence we treat it as capital profit. Entire thing. Correct. Valid question only, but I hope you have got it. You have to disclose separately both, sir. Not necessarily in balance sheet. Okay, but here they, in this particular chapter, they will specifically ask. Find out pre-profit and find out post-profit. We'll put up a statement. Don't worry about what to do. I've not even started with problems, right? I'll tell you what to do. Okay. So yes. Okay. Now, you got to know that we have to just find pre and post. But I also told you that they will not give you 3 months and 9 months data, but rather they will give you whole year ka data. So this whole year ka data you have to split between pre and post. That means there should be some basis of splitting. To do this splitting activity, we find out 2 common ratios that will come in every problem of this chapter. To do this split, we find out 2 ratios. One is time ratio. Another one is sales ratio or turnover ratio, you can call. To do the split up, we majorly use 2 ratios, time and sales. Simple funda. Any expense or any income which can be expressed in terms of time, will be distributed in time ratio. Like salary. Salary you have to pay monthly. Is it based on sales or is it based on month on month? Month on. Okay. So salary will be distributed in time ratio. Yes. Correct. How about salesman's commission? They will give you various expense, various income. Salesman's commission you will pay to generate more sales. So salesman's commission is expressible more clearly with respect to what? Sales. Hence you will distribute that in sales ratio. That's all. So any expense which is expressible in terms of time will be distributed in time ratio. Any expense which can be related to sales will be done in sales ratio. So how to find out this? Question number 1, I will tell you. This is okay. That's all is the crux. If needed, we may put some other ratios also or some other working note also. But these are a must in every problem. Okay. All right. I think that should be okay. Or you do a thing. I think a couple of things are not there in the book. You write down. You write down somewhere. In the notes only you can write. 2 equations you write down in the book. So that will be things. Don't worry about tax to geeks and all. We have 11 problems where so many things will come. Everything will get sorted one by one. Okay, so don't worry about individual expense, how it will get distributed and all for the time being. Write this down in your notebook. So I told in these problems, what do they give generally? I told? No, I told they will give you gross profit. From that you need to find out net profit. Most probably they would have given gross profit. But in some problems, gross profit will be missed. You tell me, how do you find out net profit using GP? You have all done this. Express an equation for me. I know you have done it in ledger format. Tell me an equation, let's see. You have GP, but you need to find out net profit. How do you do? One of you, please.
Gross profit plus operating income.
Tell me direct, indirect. It's okay. So it'll be easier.
Plus indirect income minus indirect expenses.
He's saying GP is equal, NP is equal to net profit plus indirect income minus indirect expense. Is this correct? So we used to prepare trading account and P&L account. All direct expense, direct income goes to trading account. All indirect expense, indirect income comes in P&L account. So is this equation correct? All of you agree with this? You have done it as a ledger, but is this equation sinking in with you? 100% okay? Correct, no? Online also good? Yes. Suppose they give you net profit in the question, but you need to find out what, sir? They have given you net profit. They have given you indirect income. Indirect income generally it will not be there. Okay, but let's assume it is given, and indirect expense is also given. You just need to find out GP. Can you reconstruct this equation for me? How do you find out GP now then? Can you reconstruct mathematical equation simply? GP is equal to net profit plus indirect income. Here you have added. So that means when you send it to the opposite side, it will become minus indirect income plus indirect expense. Okay, now. So we will use this equation if necessary, provided they have not given gross profit in the problem. So write down this in your notebook. Or one more equation is also there. Some of you might have solved it. GP is nothing but sales minus cost of goods sold, COGS. Have you done this? Yes, COGS, cost of the goods sold. Sales minus COGS will give you gross profit. Online is also okay with second equation. One of the two will be utilized in the problems if GP is not given. So write down these two, that's all, in your notebook. I've brought it in the chart, I think. Just in a notebook also, let it be, it's fine. Somebody is saying cost of goods sold also, I know how to do it, sir. COGS is nothing but opening stock plus purchasers plus direct expense minus closing stock. Wonderful. Not required. If you want to still update it, you can update it. No worries. Opening stock plus purchases plus direct expense minus closing stock. Not that this and all will be tested here, but just somebody pointed out, so I thought might as well write it. Finished now? Okay, let's have a quick recap. Topic name is profit or loss prior to incorporation. So that means the crux of this topic is only to find out two things. One is pre-incorporation period ka profit or loss. Post-incorporation period ka profit or loss. Pre-incorporation profit represents capital profit. Hence it will be transferred off to capital reserve. Post-incorporation profit represents your regular revenue profit, which goes off to P&L. Okay. So pre-incorporation period means the period before registration. Before registration, the period we call it as pre-incorporation period. Okay. So in the problem, as I said, they will not give you this pre and post ka data separately. They will give you whole year ka data. So that means they will give you many income and many expenses, but that income and expense will relate to the whole year. So that whole year data you need to take and split it among pre and post. The split is done with the help of two main ratios, that is time ratio, sales ratio. Any expense which can be expressed in terms of time will be distributed in time ratio, like salary, depreciation, etc., etc. Any expense which is better expressible in terms of sales will be given in sales ratio, like advertisement, selling commission, etc., etc. Are we fine? All right. And then I said normally in these problems, the starting point is mostly GP. Gross profit in some problem will be given, in some problems it will be missing. If it is missing and if they give you net profit, there is an equation. GP is nothing but net profit plus indirect expense minus indirect income. Or if they have given sales and COGS, using that also you can derive GP. That is nothing but GP is equal to sales minus COGS. Those are the two things. All right. Thank you.